Good morning, everyone. Hello, and thank you for joining all of us today for this interactive webinar between FPP and Proxy Financial. So over the past month, you've probably seen or heard a series of podcasts featuring this dynamic collaboration, bringing invaluable insights to our subscribers on what the advantages are of pre- and post-immigration planning when it comes to the EB-5 visa investment program and the transition of relocating to a new country, specifically here in the United States. Before we get into the full discussion on this webinar, I'd like to reintroduce our guests today. We have Manuel Ortiz, who is part of the executive team at FPP and leads our global efforts. Manuel has led award-winning investor relations teams and assisted clients from over 40 countries. In recognition of his work, he's earned a National Industry Award for bringing EB-5 services and educational resources to underserved countries around the globe. And we have Brian Calkins, who is co-founder of Proxy Financial. After 10 years of working on Wall Street and having a unique bicultural background, Brian gained the desire to expand his expertise in international wealth management. Together with his partner, they co-founded the Proxy Financial Group to serve as fiduciaries for U.S. nationals and citizens around the world, seeking to protect, grow, and diversify their investments in the U.S., including a unique immigration planning service. We also have Oleg Svagin, Director of Financial Planning at Proxy Financial, who specializes in complex financial planning strategies, including multi-generational planning, trusts and estates, employee stock options, restricted stock, insurance, college, and retirement planning. Oleg has spent 9 years working with high net worth individuals across the globe. We really hope everyone takes something away from this unique partnership between two organizations that really understand what it takes to assist in the immigration planning process. Manuel, I will let you get into it.
Hey, thank you so much for that great introduction. And Brian Oleg, thank you again for joining us. And I would like to start off just very quickly, just to say, for those of you that haven't heard what EB-5 actually is, it's a program that was created by US Congress back in 1991, and it really did not become popular until the really late 2008, 2007, 2009, around that time, the late 2000s. And it was because there was a global recession. And so that was really driving a lot of interest. And it was actually created in 1990. Sorry about that. But so it didn't get popular until the late 2000s. And it was because the US at that time, the credit markets were basically frozen. And the US was looking for ways to create jobs. So what the EB-5 program actually allows is for the applicant spouse and unmarried children under the age of 21 to obtain US residency. And since the late 2000s, it's grown so much into popularity into other markets. It's just been a big global success, and it's a win-win for everybody. International families are able to obtain US residency, and it actually spurs job creation in the US. Now, as families are going through the transition of migrating from one country to the other, there are many things that need to be considered, right? And stuff that are as simple for us that live in the US to say, hey, I need insurance, I need a driver's license, where are my kids going to go to school? Going through that process, for somebody that's coming from another country, that can be very challenging. And plus, you have to be able to trust people to guide you in the right direction. And there's also a financial planning aspect of it for when you come into the US. And I think this is where Proxy Financial actually comes into play, because they specialize in financial planning for international families. And Brian, maybe if you could talk a little bit more about the types of services, how Proxy was founded.
Yeah, absolutely. Thank you, Jessica, the team at FirstPathway, and Manuel for the invitation to have us. It's always a pleasure to talk to partners about immigration planning, right? So we have, our DNA is planning. We're investment managers, right? So we open accounts. A person will open an account at a bank, never send the money to the investment advisor. Your money goes to your account at a bank that we will help you open the account. The investment manager will buy and sell stuff on your behalf as a fiduciary. That's that boiling down the whole conversation. That's basically what it is, right? So you have somebody, it's a service. You have somebody that's going to invest. I hear a lot. I grew up in Brazil, right? And I hear a lot Brian, do you invest in this? I want to invest in what you invest in, because if you're doing it, it must be safe, right? You're not afraid to lose your money. So why don't you put my money into what you do? That is absolutely 100% the wrong approach. You should invest in what's good for you. You should invest in the risk. So markets go up and down. You should invest in things that allow you to sleep at night. Maybe you're a high roller. You like Las Vegas or Atlantic City or Monaco, right? So you're okay with opening your app and seeing that your money is positive one day, the next day it's negative. You have a plan for the future, the next 10, 20, 30 years. You know what that's going to do for your family, for your retirement, for your estate planning. So boiling down what Proxy does to that, doesn't really answer the question from an immigration standpoint. But like I said, Proxy's DNA is planning. So how much money did you put into that account? Put all of it? Did you put your emergency savings? Did you put your opportunity reserve, right? So Proxy will work with the family a step before. How much money should you bring to the States, right, during this transition? So you've done your EB-5 investment with a safe investment that's going to return your money, like FPP's FirstPathway Partners Coachella investment that's open today for investors, right? So your money is safe. It's going to produce the returns. The object of that investment is not returns. The object is safety and return of capital. So between 6 and 7 years later, the money is going to come back. Great. What about the rest of your life? Where are your kids going to go to college? Did you know that you can pay less tuition in the States if your kids go to a state school, right? And they are paying in-state tuition. And Oleg, who's gonna speak a little bit today as well about this process of planning, has helped clients, and we're registered and licensed, and we're supervised by the SEC, who's the supreme regulator of financial markets in the USA. Okay, we are connected to the SEC. And for that, what does that mean, right? That means that we can't just go around saying, hey, you want to invest with us? We can get you 10% returns per month. We can't say that because that's not possible, right? We will lose our licenses and the SEC will close Proxy. Again, that goes back to that fiduciary ingredient, right? But again, we have saved hundreds of thousands of dollars in education costs because of the plans that Oleg and his team have put together, right? And all of that starts, Manuel, way before the family arrives in America, right? A planning process is really about, it's a lifelong plan. And one of the things that's different, I've lived all around the world. Like I said, I grew up in Brazil. I've lived in Chile. I've lived in Belgium, Germany, and I haven't seen really this planning service offered in these places of the world. I lived in India for a while too. And in the States, I think two things happen, right? One thing is, historically, the States has a culture of planning, has a culture of specialists. And number two, the variables vary less here. Let's think about that. So your inflation, right? I grew up in a country where we had hyperinflation, and I would get my allowance to buy food at school. My parents would give me a stack of bills this big. The next week, they would give me a stack this big. The following month, I had to have a wallet that was this thick to carry the money in Brazil, for real. There's a lot of inflation. In the States, that doesn't happen, right? So that's what I'm saying, is the variables, they vary a small amount, which allows professionals like Oleg, and again, his team, to plan the rest of your life for the next 10, 20, 30 years, because we have an idea of where inflation is going to go. And then all we have to do is plot that using software and different tools that can allow you to see your life many years down the road.
So I can bring this down to earth a little bit. Our main service, if you really break everything down to the fundamentals, is a primary focus on education. This is particularly important to me. I experienced all of this. I came to this country as an immigrant. I watched my mother make mistakes and struggle through decision making because you don't know what you don't know. And in a system like the United States, as Brian put it, the differences are complex, both in the good and in the bad. And what we do is we take an approach where every single conversation we have, it's a fresh conversation. There's no template, there's no itinerary, there's no way for us to approach this the same way we would have approached someone we had spoken to last week. It's a fresh conversation that is built around that the individuals and the family's specific situation, their goals, their wishes, their commitments, and frankly, what is and isn't available to them. And it's important that they know that, because immigrants in particular often are making decisions inside of a bubble. They're not aware of how this decision impacts them short-term, long-term, and anything in between. And so for anecdotally speaking, the people that were guiding us when we came to this country were our relatives. They were only here for 10 years longer than we were, so their knowledge was limited. People shouldn't be relying on this kind of dogmatic approach of, well, what did you do? Well, how did you get this done? Well, what have you heard? Because frankly, some of that information is going to be wrong. Not out of malice, not out of greed, but just simply because that's really all that that person has experienced. Whereas we bring the full picture, and we come to this from a holistic perspective of balancing the sacrifices that a family needs to make against all of the positives that those sacrifices will bring. We had a conversation recently with a client who received a recommendation from us that was different from every recommendation that he had ever received from a CPA. And they asked us why. And the answer was simple. The CPA was looking to maximize a 1-year benefit, whereas we were looking at the big picture over 30, 40, 50 years. And sometimes making a decision differently that seems counterintuitive actually has all that much more impact down the long run. And that's the power of the financial planning perspective.
And Oleg, you touch on something that's really important, and Brian as well, that the financial aspect, the savings on college tuition are really important, and that gets multiplied per child, right? If you have 3, 4, or 5 children, 2 children, you're basically doubling, tripling that cost. Now, what I would also add, that what's really impactful about the EB-5 program, one thing is the tuition cost, right? Because we do work with ultra high net worth individuals that'll say, well, the cost isn't really that important. But what I'll tell you is, just in talking to many investors in the last 10 years that I've done this, is that what money can't really buy is, if you imagine, this story actually happened about a month ago, that you can imagine you're an international student in the US. You worked extremely hard for 4 or 5 years to finish at the top of your class. You're an international student, you graduate, but now you're depending on a corporation to sponsor you, right? And those opportunities are much more limited. You're also required to work only what you studied for. Last year, for example, that particular visa is called an H-1B. There were over 700,000 applicants, and I think it was about 14-15% were approved. So not only are opportunities like that limited, if you do enter, what that is just basically a lottery, your chances for approval are pretty slim. And so the alternative is you have a certain period of time to find a job, or you end up having to go back, right? And that's very tough, especially when you spending your life here. Now, the other aspect is that some of these international students, the preference is to stay here for 2 or 3 years, learn corporate America, and go back and run the family business, right? But that opportunity is basically gone. And I think that's one of the big impacts.
And you can plan to stay 6 months of the year at your home country. So we come across with the green card. As a green card holder, you can stay 6 months outside of the States and you don't lose your green card, right? So the rules of engagement are, if you want to be a resident in the States, you have to spend at least 183 days and 360 days in the state, 365 days in the States. And we've planned for families, right, Oleg, to businessmen in Brazil, for example, right? It's very hard for them to disassociate themselves from the business in Brazil. So they move to the States, get a green card usually for the kids, right? Usually for the next generations. And they spend 3-4 months in Brazil out of the year running the business down there while they live up here. So again, we tend to limit ourselves and make a black or white decision if we don't have a professional that's going to help us first make that future plan into a reality, right? That's what we do. It's very vague. We have this thing in financial planning that this is a study from the MIT. So I think they know what they're saying. They know a thing or two. The human being thinks of him or herself 20, 30 years in the future as a different person. So when you're sitting there thinking and making plans of like, what is my retirement going to be like? What is my future life in America going to be like? I changed countries. A person goes so far off track. They're like, I don't know if I'm going to like chocolate ice cream anymore. I don't know if I'm going to be an aficionado with pizza, or if I'm going to like going to the beach. Maybe I'm going to be a mountain person, right? And so it's hard for you to make plans so far out of the future if you don't have help from a professional. And then what we do is we transform that future plan. What do you want? Close your eyes, think about what do you want. So it sounds like we're more financial psychologists than investment advisors from Wall Street. I will confess our job is about 50-50. But we help translate those dreams, hopes, goals, fears too. Like what can't you stomach in terms of investments, or what is catastrophe? And then we put an insurance below that. So you have a safety net so that your family is never going to backtrack into whatever situation it is that you were before. And we translate all of that into tangible steps in your financial plan to help you go from A to B. It's possible.
Hey, Oleg, as you're going through this process and you're going through the pre-immigration process, what should an investor actually consider with what assets? What does that actually look like?
So it's a multi-part question. So we we want to ensure that clients have the smoothest transition possible, which means, they can't just throw all of their money overseas and then not have anything to live on for the interim while they're still kind of in process. So this kind of ties back to something we discussed on one of our earlier podcasts, is when is the appropriate time to even start this? And the answer is when the solution is in sight, if that makes sense. When you've made the commitment, when the ball is already rolling and you're already in process. This gives us a relatively reliable timeline of how long this is going to take, when it's going to be completed, and when you could actually start making final steps and transitioning into that post-immigration phase. So to answer your question more thoroughly, it's your excess money. It's whatever you don't need to live on, whatever you could start moving over, and in major terms is whatever is liquid at the time. So, let's say you have your cash accounts, you have your investment accounts. I'm going to use Brazil as an example. Brazilians love their fixed income plays. Something to the tune of 13% returns given a 10% inflation rate. So things like that are easily replicable in the States to provide that same exact cushion and start creating a footprint. Once you're kind of halfway through the transition, once you've already kind of established yourself here as a resident in one form or another, while you're waiting for the process to complete, that's when you start kind of untangling yourself from the home country. So whether that's land ownership, perhaps that's real estate, maybe that's even businesses that should be transferred into international but stateside. What we tend to look at is very, very important throughout the entirety of the plan, not just from a, kind of where do we start conversation, and that's the concept of opportunity cost. Maybe your Brazilian income is going to be better than what you're going to be getting in the States short term. We're going to keep that. We're going to keep that, and we're going to work around it. We're going to find a way to build around whatever is the stickiest part of your situation, and we're going to complement it by creating other avenues of income, by using your assets, by using your income, maybe in the form of new savings even. Maybe it's a slow play. But it's never one answer to that question. It's always What do we have to maneuver with, and how do we most effectively put it to work?
You bring up some really good points. I just have a general question now as well. As you were talking, I was thinking through, and Brian or Oleg, please feel free to answer this one. But have you worked with investors before that have invested in the US, and that investment in the US turns out to be a great hedge against the devaluation in their home country? Maybe if you could talk a little bit about that sort of impact. And if
Sure.
not, that's okay. But I was just curious if you've seen those types of examples in the
Absolutely.
past.
Absolutely. No, I said when I grew up, when I was a kid, I used to get my allowance at school to buy my Coke and meal during the break, right? And then that money, the stack of money was growing, and then Brazil would cut 3 zeros and issue a new currency. And then the money that I would get from my allowance went back to a few bills, and then inflation would come in, and that would get bigger. And I saw that seesaw process until 1994. Okay, 1994 in Brazil, and that's right around when a lot of Latin American countries issued their current currencies. So Mexico issued the current peso in 1989, and some other variations throughout Latin America. So my point there is, from 1994 to 2020, the pandemic, the Brazilian currency went from 1-to-1 with the dollar to 1-to-6. So every $1 used to get you 1 Brazilian real in Brazil. And in 2020, 1 US dollar would get you 6 Brazilian reais. So if you were an investor in US dollars in 1994, you put in $10,000, you had 10,000 reais. Fast forward 30 years, your same $10,000 is 60,000 reais in Brazil. Now, a currency, any investment advisor will tell you, Manuel, that a currency is not an investment, right? A currency is a means to get to an investment. If I want to invest in the UK guilds, right, which are the treasuries of the US, you buy pounds, British pounds, and with those pounds, you're going to buy the UK treasury, the guild. You don't buy pounds and put them under the mattress, because you're buying something that's going to devalue over time. Every currency, every economy around the world has inflation, right? And if it doesn't, it's in bigger trouble. And so, but the store of value of a strong currency like the US dollar, or another currency. Now, just to talk about that really quickly, because we have a lot of international participants seeing us here today. The US dollar has almost 200 years of existence. And I'm hard pressed to find another currency with that age that has suffered through so many things, through a civil war, through global wars, through all kinds of crises, and it's maintained its predominance around the world, right? You have the Swiss franc, but it's a tiny market, right? You have the euro, which was just created 20 something years ago. And then you have the Chinese yuan. We've had investors, global investors, right, Oleg, that have sought the Proxy team and said, I don't want to buy dollars and invest through the American financial system. I want to buy yuan. And my difficulty with that is that the government that's backing the yuan is not a liberal, in economic terms, is not a liberal democratic government with capitalistic roots, right? So preserving your wealth is not US dollars, but it's investments that you can get through US dollars. So I'm a passionate teacher. Sorry if that was a bit overboard on the technical side.
No, that was great. I think the historical context is really important, because sometimes history gives us perception of what the future is going to look like. And so I think that's really important. I think that as investors are also evaluating different investment strategies in the US, one of the things that also has to be considered both in their home country and the US is the question of tax. I know none of us are tax advisors here, but I would just like to ask, when that comes up, you have to take care of taxes in your home country, taxes in the US, what the impact is there. How do you typically handle those types of situations?
So the tax play is interesting because it's very, very complex, and it relies on a lot of different factors. The first of which kind of starts and creates the foundation of everything that you do going forward, and that's how are you actually receiving the income? Are you getting it from, is it a foreign income? If it's a local income, how is it structured? Are you a salaried employee? Do you own your own business? If you own your own business, that opens up an avenue of additional questions. So the first thing to kind of establish is, where's the income coming from? Because each of those answers has a completely different variety of solutions. But at the end of the day, it almost always comes to tax deferral. And that's how do you take the income that you're receiving and how do you save it in a way that is both beneficial to you on an individual tax year basis, as well as over the long-term period. So that's when these tax deferral savings type structures come into play, like 401ks, IRAs, SEPs. It really, you have a wide spectrum of available options, and it's usually a teeter-totter of balancing against those.
What are IRAs, SEPs?
IRAs, SEPs,
and
401ks.
For a foreigner that's coming here with an investment in FirstPathway partners, sorry, FPP, if I may. I'm not thinking of retiring. Like, why would retirement accounts apply to me? Like, I'm covered.
So I think the term that is internationally used is the word pension. It's a way for you to create an income in retirement to supplement your needs. Now, these IRAs, the SEPs, the 401ks, they're effectively all one tax vehicle. They just kind of apply to different types of structures and different types of incomes. And the fundamental focus of these vehicles is to grow income without having to pay any form of taxation on that growth, which is something that you do have to do on any after-tax money, whether that's through sale or through dividend income that is provided by that investment. When we talk about investments inside of these entities, we really could be talking about anything. We don't necessarily need to be talking about stocks. We could be talking about real estate, but the same principles apply, because even in the form of real estate, if it's producing an income, that's taxable. If it's sold for a profit, that's taxable as well. Whereas if that same type of event happens inside of this, let's call it qualified structure, there is no taxation. You are locking in the full value of whatever that growth is and whatever that benefit or income is up until the point where you start withdrawing that money.
Got it. So here's one thing to kind of keep in mind as investors are going through the immigration process, because I think this is definitely tied to what we're talking about now, is when does the clock start from a global tax perspective, right? And so I think that as an investor, the EB-5 process, oversimplified illustration here, but you basically have your I-526 stage where USCIS, the Immigration Service, is looking at the project and your source of funds. And then you have your 829 phase, which each investor is required to create 10 jobs. And so that 829 stage years later is when the USCIS, the Immigration Service, says, did this investor create 10 jobs, which is a requirement. Now, after your first phase, the source of funds and the project is approved, is when you receive your conditional green card, which is the transition to when you become a global taxpayer. And so at that time, I think you start getting into the post-immigration process because you've migrated and you're here. And so one of the questions that investors typically have is, when is it better to start this process? And I think it's two different processes that we're talking about, right? One is when you're in your home country, the other is when you get here. Maybe if you could talk a little bit about when you get here, now what do you need to consider?
Yeah, once you receive, there are a couple of countries around the world that have global taxation. So We see a lot of mistakes when a person says, what I make in the US, I'm going to declare and pay taxes on in the US, and what I make in my home country in Thailand and Brazil and India, I'm going to declare there. That's not necessarily how it works. Again, we don't give tax advice at Proxy, but we understand how it works, and we help you create a plan around that to minimize taxes. Usually you have a reciprocity rule that countries have to sign, right? So it's not a given rule of the universe like gravity. A US, for example, would sign a contract, would sign a reciprocity agreement with another country to say, if I collect taxes in the States, the other country says, I will recognize them on my tax return here, and vice versa. So to avoid double taxation. So if you paid 25%, let me boil it down in very simple terms. If you pay 25% income tax in the US, very rarely are you going to pay, in your home base, it's let's say 20% income tax. Rarely are you going to pay the 25 plus the 20. But it's very rare a country that does not recognize those taxes. So you won't pay it twice, but you do have to watch out. And there's a lot of tools. That's a main difference with the US from all these other countries where I lived and worked, is that the tax system and the pension system, like Oleg mentioned, they're kind of automatic. And your money is going to be drawn in. The government, what are you going to do? You lose the money to the pension. What are you going to do? In the States, it's the opposite. The individual has the decisions. What tools do you want to use? What tools fit you? Are you an entrepreneur? Are you going to come over with a salary? So you have these tools available to you. And beyond that, one thing that I want to mention just really quickly is the financial products. So you have things like life insurance. And around the world, life insurance is used for life insurance. And in the States, it's used for life insurance. Now, the market here is so big, and there's so much competition, that they've designed products over the years that can accumulate an investment value inside your life policy, which is unheard of around the world. And you can take money out of that accumulated. Remember, I said it's a policy, a life policy, so it's life insurance. Inside there's an investment vehicle where you can overfund. You put more money than you need for your life insurance. That money can grow, and you can take that money out tax free if done the right way. Those kinds of tools are rare around the world. And that's the American financial system. And that's why, like Oleg said, usually we turn in life. This is true anywhere in the world. If you're American, you're moving, you've been born here, you're going to look to the oldest generation, to your parents, your grandparents, your older brother, older sister, like, hey, should I buy or should I lease? Like, I'm confused. I don't know what to do here. And that's where our profession of financial planning exists, is to not only answer, those everyday mundane questions, but also which tool should I use to reach my objective, right? It's vastly complicated. And like I said, going back to your original question, Manuel, the withdrawal from those certain products can be done tax-free. And so we help the families. Again, pre-immigration is always easier. You can set the charter of where you want to navigate easier. But after you've immigrated, it's also very possible for you to say, okay, here's my situation, and here's where I want to go, and here's my taxation. How can we reduce it? And a financial advisor would work together with a tax professional to design that kind of savings.
And then looking at it from a perspective of cash flow, right? Because I think sometimes when investors come to the US, they're just thinking through, okay, I'm going to need some sort of monthly cash flow, or every 2 or 3 months, or something like that. What type of products are available for investors there? So I know that you mentioned that some of them you can basically take out tax-free and like those sorts of things. But if somebody's looking for some sort of a regular cash flow stream, are there products like that that's available for people? And I guess that also ties into one of the other questions that we had discussed too, is that, what makes the American financial system so special, right? What is, one of the big draws to it? Why should people really consider it?
So I guess the first part of the question is how do you create that income? Part of it is about timeline. So do you need the income immediately? Do you need it in 5 years? Do you need it in 10 years? The other question is, what are you coming here with to create that income with? The difficult scenario is when you don't have answers to any of those questions. But let's assuming that someone is coming here with assets that can be turned into an income. There are several options that are available to new immigrating individuals, then of course people in the States to kind of supplement that. Timing is always very, very important. Question of what's happening in our markets at the time. If we're talking about today as an example, interest rates are incredibly high. We're able to take advantage of those interest rates, convert money into the form of either dividends paid through the fixed income space, which is bonds, essentially contracts written by either corporations or governments where the investor is the one giving them a loan for the promise of income returned over a period of time. So there's that avenue. There's certain proprietary products that can be sold that could kind of simulate that upfront. Things like annuities, life insurance policies can create income over time. But the reality is that early intervention is very important when we're talking about creating an income stream. It's very difficult to come here day one and say, okay, I need $10,000 a month without having a lot in terms of assets. So this is why we talk about that early pre-immigration process, is because we need to make sure that the fundamentals are in place by the time you arrive. We need to make sure that that income is accounted for, and that we're taking advantage of whatever avenues are available to us at that time. Because if not, then perhaps delaying is the smartest thing to do, until that income stream can be built up.
So this is perfect because this also ties into the immigration process and EB-5, and I'll just finish with this and then we can definitely open it up to questions. But if you think about EB-5, you see the investment process and the immigration process. There are two timelines working in parallel independently, right? They can be tied together or they cannot be, right? It just really depends on processing times, and it depends on each investment that you're looking at. And I would also say that in terms of investments, right, we've talked about different kinds of investments, different kinds of strategies. And the one that I would like to talk about now is just our Talis investment that's located in the Coachella Valley, where, Brian, you were exactly right. The way to look at that is more of a conservation of capital play. There are returns that are attached to this. So that's good. But, it can also be a hedge against some form of a devaluation in the home country as well. And so from a capital preservation standpoint, I think it's really important there. Now, I would also say that whenever investors are conducting their due diligence on an EB-5 project, it's very, very important to consider underwriting it as, that's analyzing, looking at the project as the immigration project first, right? Am I going to be able to get my green card by investing in something like this? But then also look at it from the investment perspective, right? Two different lenses. On the investment perspective, it has to make sense. There has to be a case for this type of investment, because that's what's going to dictate whether you're going to get your money back, right? In terms of our Talis project, one, the jobs are already created. As I mentioned, each investor needs to create 10 jobs. So that's already checkmarked. The project started in 2022. So we've already started creating jobs. We've already created the minimum requirement for each individual investor. So that's done. Whereas if you were to invest in a project that's just barely getting started now, you're taking on the construction risk and it may or may not get completed. Right here, it's already in process. And then I would look at it from the investment perspective. In the Coachella Valley, a resort of this type, we're talking about ultra luxury resort that consists of a Montage Pendry brand with an Arnold Palmer designed golf course in the city of La Quinta. A development like this in the area hasn't been conducted in the last 40 years, really since the 1980s. And if you look at the number of hotel rooms that were located in the Coachella Valley going back to 2002, I think there were like 14,000, right? In 2002, 14,000. You look at 2022, still 14,000. People that usually go stay there will stay in Airbnbs or at some of these really nice resorts that are already there, but they're about 20 years old. And I go there a lot, and They're a lot older. So there's a need for something like this that's there. And then we've also structured it as a loan and have other triggers there that make it a conservative investment that we're also just protecting investor capital. And so I think those are the things to really consider from the investment standpoint and the immigration on a project like this, an EB5 project. And I would like to open it up to any questions that anybody might have or anything that you'd like to add, Brian or Oleg, as well as I just looked through the questions that we have here.
Yeah, I think one question I didn't actually get a chance to answer is what separates the U.S. financial system from other global economies and financial systems. What we have here is very, very unique to the United States. We have what is called a fiduciary profession. What makes our system so unique are the very, very rigorous protections that are placed on the investor to protect the investor and their assets from being taken advantage of and from professionals to kind of do the right thing. So what makes a fiduciary? A fiduciary is someone that is legally obligated to only do what is in the client's best interest, which means you do not have any of your own personal conflicts. You work inside of the scope of how can I approach this from the most holistic possible angle? Now, not every financial advisor in the States, and definitely not every financial advisor globally, is subject to those rules and could be qualified as a fiduciary. But here in the States, if you're working with a registered investment advisor, that is someone who definitely qualifies to meet that label and who is obligated to do everything that is in your best interest, which is why earlier when answering your questions, we put an emphasis on specifically catering everything to the need of the individual.
One of the questions that just came up as well is that, they've mentioned that as an investor, you're looking online at all of these different types of investment products, and you're looking at articles in Forbes and CNN and a retirement account. Why is insurance so important? And so I would imagine that as an international investor, there's a lot of confusion. There's a lot of misinformation that's out there. We actually see that in the EB5 industry as well. And so that's why I think it's important to work with people that have track record and everything else. But as an international investor and having just all of these products that are just out there, what should they do to make sure that it's the right product for them?
Brian, you want to take that?
Take that.
All right.
So I'll give my opinion seconds and I'll pass it off to you, Oleg. So in my experience, and I was one of those, right? So I've always been passionate about financial markets. So I was reading about markets from a young age and reading books and listening, getting every audio book back in the day that I could get my hands on. And that's not a problem, right? That's not bad. That's good. You're evolving, you're growing, you're absorbing more things. We encourage that from our clients. We give them books, we do webinars, we do seminars. The problem comes in is when you don't have a professional help. Same thing with a medical professional, right? So I'm feeling, I have a weird ache on my neck, and you Google that. The worst thing that you could do is Google the symptoms that you're feeling. You ever done that, Manuel?
Yeah, yes, just about last week. It's a scary situation.
And then all of a sudden you're like, oh my gosh, like I have a range. I could have COVID, I could have cancer, I could be dead. I don't know, right? There's a million things. And so it's the same thing. When you need to make a very important decision in your life and you come to a pivotal point, know that you can count on a professional, like Oleg just said, that doesn't have conflict of interests. Let's just put it out there. Wall Street has not been the most trustworthy industry out there of investments. In some regard, I'm from the industry. I've been in it 20 years. I see why people don't trust. 2008 was because of the greed of investment banks. And that's why the regulators put all of this pressure now on us that are licensed and registered investment advisors. We're audited every year. They look at bank accounts to make sure we're not getting money from some other part. It's that transparent. I am yet to see a financial professional around the world that has their bank statements audited by the regulator. I didn't see that in South America. I didn't see that in Europe. So it's a lot of regulatory pressure, all for a very good reason, right? Because of sins of the past. And so seek professional advice, right? The articles are written with good intentions, and maybe they zero in into one specific tool that's novel. One example we're seeing a lot in America nowadays is a Roth conversion. Roth conversions are the best, but does it apply to your situation, right? Does it really make sense to pay those taxes now versus later? As you can see, it's complex. When you read that article on Forbes, you're like, oh my God, like this is what everybody needs to do. But it's taken out of context. I'm not sure if Oleg, you have anything you want to comment.
I do. One of the questions that I get very, very frequently from clients from all demographics is, what should I be asking when I'm looking for an advisor? Am I asking the right things? And I have a very different approach to that answer. And frankly, the way I see it is you shouldn't be asking to begin with. Your financial professional, in order, if they're a qualified and holistic professional, will be answering questions long before you realize you had them, because we want to illustrate the downside of certain things. We want you to know what the risks are, because in making the decision, you have to, like I said, create a balance between the risks and the benefits. A holistic professional will outline all of that for you and create reassurances behind those risks, because one thing might have a risk that you're covering with a different part of the plan. And that's kind of how all the pieces fall together, is by taking all of those potential downsides and mitigating them through other approaches and other strategies. So when you're shopping around for an advisor, which I encourage everyone to do, please speak to multiple individuals so that you can see who is the one that is providing the most value. Go with the one that's answering all of your questions before you need to ask them. Go with the one that's focused on educating you and being transparent about everything that's happening with the recommendations, rather than the one that's just, maybe excited about a certain investment or a pitch that they're making.
Brian and Oleg, I'd like to thank both of you so much for joining us this morning. Really great discussion. And I would just say that if you have any closing remarks that you'd like, please go ahead.
None for me. Very happy to be here.
Oh.
Thank you so much for the time.
I'd like to say thank you once again to our partners and friends at FPP for putting this together. We have, like we just discussed, right? There's a lot of information out there, and you really don't, if you're on your own researching, you don't know where to go, right? And you have professionals that can guide you, can assist you, can give investment recommendations, and you have safe investments in the EB5 space by tried and true players in the market like FPP. And I've looked over the documents for the Coachella, the Talos investment in the Coachella Valley. It's uniting two very interesting aspects. One is the lower investment with because of the jobs and the rural aspect of it, and the other is a luxury resort. Normally, when you're talking high-end luxury, you usually have to invest more, and FPP does this with excellence. They've returned capital to investors. They are a true partner that you can count on, and we would love nothing, right, Manuel? This is just the beginning of the conversation, right? Proxy always finishes our webinars with the first, for you to make a 1,000-mile or 1,000-kilometer journey, you've got to start with the first step. And we are here to answer your questions, to talk to you, to talk about your situation. This is just the beginning. Proxy doesn't charge for initial consultations. We would love to hear about your family, about your plans, and help you in any way possible along the way, because that's what we do.
No, thank you so much. And one of the things that I would add as well, just to go back to what you mentioned about Google, right? Is that if you do go to Google for a lot of things, that you see horror stories on the investment side, horror stories on the EB5 side, a bunch of information, and then sometimes that just makes investors not want to do EB5 or invest in the US. And I think that the way to overcome that hurdle, and really what the easiest way, is one, to always remember that in any investment, there is risk, right? In any investment, that's always really going to exist. But I would also say that it's important to study the track record, because bottom line, what we're talking about here is, can I trust this person, right? Can I trust Proxy Financial? Can I trust FPP, right? Because sometimes I think investors look at bios, look at the collateral material. Oh, wow, this presentation is really nice. Look, this brochure, high quality paper, and like everything else. But really, if you've been in the business for a very long time, and your track record is strong, and that doesn't mean that you're hitting a home run every single time, right? Because if you're in the business for a long time for investments, right, some things are going to take a little bit longer than what you projected. But the track record, those things are actually very important. And I think that's what you should consider. For First Pathway Partners, we have 100% track record in investors obtaining their permanent green card, right? So that's really important. We've been at the forefront of the industry for a very long time. Our founder, Bob Kraft, was the president of the IAUSA, which is the National Trade Organization, EB5, for 6 terms, right? That's something where the industries come together and elected him. And so I think that's what's really important to consider whenever you're looking at investing. And Brian, did you have a question as well? Did something come in?
No, about EB5 Direct. If you could give us a primer. A question came into the queue, Manuel, last minute question. EB5 Direct. Not sure if you want to answer, address it, or reach out directly to the person.
Sure, I'll answer it very briefly. I think for EB5, the way to consider it is that right now you have TEA projects, you have rural projects, you have projects that are not a part of the set-asides, which are going to be a little bit more expensive. TEA projects is what the Talus project actually is, so it comes in at the $800,000 level. Direct EB5 is going to be a little bit different. And I think it goes back to international investors being very successful entrepreneurs in their home country, right? Whereas here, EB5 to a regional center is a passive investment. So we're doing all the work. We're monitoring the developer. For example, are your investor funds being used for what they need to be used for? And I'll give a really good example about direct EB5 is that, many years ago, I was working with an investor, and he had a very successful franchise of restaurants in a particular metroplex. And so very successful, had many restaurants, and he decided, you know what, I'm just going to do EB5 by myself, because all I really need is 10 jobs, and my restaurants are very successful, so I'm just going to do this. So he ended up investing, at that time, the investment amount through a regional center, which is what FPP is, was $500,000. But he ended up putting $1 million of his capital into this restaurant, right? So double what the investment was, put it in. And he also was not able to maintain those 10 jobs for a period of 2 years, right? Because they have to be permanent jobs is the other thing, right? In restaurants, you have transitory jobs and everything else. And think about it, right? The economy goes up and down. And so now, as investment professionals, you never try to time the market, right? Because if you're trying to time the market, it's probably the worst thing that you can do, right? It goes up and down, but when it's going to go up and down, you don't really know. And so, he basically mistimed what the market was going to be like. It didn't get off to the roaring start that he thought. And so what ended up happening was his investment ended up just evaporating. The restaurant was successful eventually, but his immigration blew up, and because he was unable to sustain the jobs. Now, what I would add is that 2 years later, right, he met with me and he said, hey, this is what I did. This is what happened. So now what I've had to do is get a mortgage against my residence to now come into EB5 that way. And so it cost him 3-4 times more than what it would have originally costed. And so my point here in giving the story is that whenever you do direct EB5, you're actively managing that, and you're also actively managing in a market where the rules are going to be a little bit different. And Brian, I don't know if you want to add any to that, because I know there's a lot of similarity in what I just mentioned for
Yeah.
EB5 with regular investments as
Yeah,
well.
absolutely. I can tell you, we do a lot of work with small business owners at Proxy throughout our divisions and our financial advisors. And I can tell you that $1 million to generate 10 jobs for 5 years is not enough. This is not investment advice, but just a practical, down-to-earth conversation. It's not enough. It's if you're going to pay minimum wage, the $1 million is not going to be enough. Plus infrastructure, plus inventory. I don't know what kind of, if you're going to work with a restaurant, forget it, because you have to rent the place, you have to buy inventory, food, and all that. So it actually ends up being cheaper in our experience and 20 years of experience in financial markets, all that I've seen throughout my career. It ends up being cheaper to do the indirect model, which is the regional center. But like Manuel said, there's a team of engineers, there's a team of professionals, there's a team of financial professionals, there's a team at FPP that's taking care of that investment while you, investor, take care of the rest of your life. Plus, there's another concept of risk. So now you're putting 2 eggs in the same basket, which is your immigration and your business, your livelihood, right? So if something happens with your business, like Manuel said, there's a downturn in the market, your visa is out the window as well. And so that's a really good example. I've seen it in my lifetime as well, where a person simply put 2 eggs in the same basket where they could have very easily put it into different baskets and reduce risk and stress for the family and financial loss.
Thank you, Brian. And I think here the lesson is that, yes, you can do EB5 through a regional center. And yes, you can do a direct EB5. But I also think that whenever you're looking at something that's so intimate and special, like a family decision, right? You're looking at your kids going to school. Yeah, the cost benefits are really important, but then being able to work afterwards, right? That status is something that's completely priceless. And if we're talking about track records and everything else, if you're looking at direct EB5 and it's your first time navigating in the US market, there isn't a track record there. And so
Oh yeah.
the risk that you have to you and your family is exponentially greater. Doesn't mean that it won't succeed, but the risk is exponentially greater. Here, again, going back to when we started, we've been doing this for many, many years, since the late 2000s. And so our track record is very strong. And again, we have a 100% track record in investors obtaining the permanent green card. And I'd like to wrap up. If you have any further questions, please feel free to contact us. Brian, Oleg, thank you so much. It was great. Jessica, thank you. And we will be in touch.
Bye, guys.
Thank you so much, everyone.
Thank you.